Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about INCYTE CORP quarterly report. INCYTE Corporation offers a diverse range of biopharmaceutical products and services for various medical conditions. The company's portfolio includes therapeutic treatments, JAKAFI myelofibrosis, polycythemia vera, MONGVI/MINJUVI, diffuse large B-cell lymphoma, PMAZYRE biliary tract cancer, cholangiocarcinoma, ICLUSIG chronic myeloid leukemia, acute lymphoblastic leukemia, ZYNYZ Merkel cell carcinoma, and NIKTMVO graft versus host disease topical treatments. OPZELURA cream, atopic dermatitis, and ruxolitinib cream, hidradenitis suppurativa, clinical stage products. Inc. Bone 123,667 ovarian cancer. Inc. Bone 161,734 cancers. INCYTE 33,890 solid tumors. Povorcitinib HS, vitiligo, prurigo nodularis, asthma and urticaria, and zilurgisertib, fibrodysplasia ossificans progressive collaboration. Genesis Therapeutics, Inc., sales channels, specialty and retail pharmacies, hospital pharmacies and specialty distributors and wholesalers. The significant increase of 21.98% in INCYTE Corporation's, INCY, stock price over the past year can be attributed to a series of positive news and developments. Key factors contributing to this growth include multiple FDA approvals, promising clinical trial results, and strong financial performance. FDA approvals for new products such as Niktimvo, Zynyz, Opzelura, and Monjuvi have expanded INCYTE's portfolio and are expected to boost revenue growth. Positive clinical trial results, including those from the Phase 3 INCYTE study for tafasitamab and the T-RU-EA-D4 study for ruxolitinib cream, have also been instrumental in driving stock price increases. In addition, INCYTE's strong financial performance has exceeded expectations, with a 15% increase in total revenues for 2024 and a 20% year-over-year increase in Q3 2025. Analysts have raised price targets and maintained positive ratings on the company, citing its strong financial health and promising growth prospects. Overall, INCYTE's stock price increase can be attributed to a combination of FDA approvals, clinical trial success, and robust financial performance, positioning the company for continued growth and success in the future. The primary drivers of revenue growth or decline in the pharmaceutical industry are multifaceted and influenced by several key factors. Regulatory actions, such as warnings, recalls, and label changes, can significantly impact a company's revenue. Additionally, patent challenges from generic manufacturers and changes in Medicare reimbursement rates can also affect revenue. Market competition is another crucial factor, with existing therapies, generic drugs, and future product candidates posing significant threats to market share. The success of discovering, developing, and commercializing new products, or expanding existing ones into new indications, can drive growth. Collaborations and partnerships can also play a vital role in driving revenue, particularly if they involve successful licensing arrangements or the acquisition of desirable drug candidates. However, supply chain disruptions, manufacturing capacity issues, and delays in clinical trials and regulatory approvals can hinder growth. Financial and operational factors, such as unrealized losses from investments and potential write-offs from acquisitions, can also impact revenue. Furthermore, intellectual property concerns, including patent invalidation or expiration, can further exacerbate decline. Net income and profit margins. A shift in favor the financial performance of the company has shown significant improvement in net income and profit margins over the past year. In Q3 2025, net income surged by 298% from $106,456 to $424,169 compared to the same period in 2024. This upward trend continued into YTD 2025, with a net income of $987,371, a stark contrast to the -$168,597 recorded in YTD 2024. Profit margins also experienced a substantial increase, rising from 9.3% in Q3 2024 to 31.1% in Q3 2025, and from -4.6% in YTD 2024 to 27.2% in YTD 2025. This improvement can be attributed to the significant increase in net income despite no change in comprehensive income/loss. However, certain exceptions have led to a decrease in profit margins due to factors such as decreased revenues from JAKAFI and limitations on third-party coverage for patients. Despite these challenges, the overall trend indicates a positive shift in the company's financial performance. The company is generating a significant positive operating cash flow, with net cash provided by operating activities totaling $870.2 million for the 9 months ending September 30, 2025. This indicates a substantial increase from the previous year's negative operating cash flow of $45,881. The company's ability to generate such a large amount of positive cash flow is a testament to its financial health and stability. The company's debt level and interest expenses have shown some fluctuations over the past year. Although there is no significant change in debt level mentioned on several pages, the available cash increased from $2.9 billion in 2025 to an unspecified amount in 2024. In terms of interest expenses, the company saw a decrease from $39,629 in 2024 to $19,349 in 2025, indicating a reduction in interest costs. The company's financial performance varied across different segments and regions. The United States was a standout performer, with an 18% increase in product revenues and a 299% surge in net income. Europe also saw significant growth, with a 51% rise in product revenues. However, other countries experienced a decline of 69% in product revenues. In terms of regional performance, the EU struggled due to government control and reimbursement regulations, while the US $340 billion drug pricing program was affected by discounted prices for eligible entities. International markets outside of the US also performed poorly due to varying reimbursement systems and government control. Certain regions within the US were impacted by high copayment amounts or benefit limits imposed by third-party payers, further contributing to poor performance in these areas. Management is optimistic about the company's outlook, expecting continued growth in its portfolio of approved products. In the short term, they plan to further develop INC 161,734 and initiate a registrational program for INCYTE 33890 in 2026. However, they acknowledge significant expenses for drug discovery and development may hinder sustained profitability. To achieve their goals, management will focus on commercializing JAKAFI and OPZLURA, expanding globally through partnerships, and investing in research to bring new therapies to market. Despite challenges such as maintaining formulary positions and managing growth, the company is committed to developing innovative treatments for patients with limited options. The company has made several strategic moves in the form of acquisitions and divestitures. Key acquisitions include the purchase of Escient, which is mentioned but lacks a specific date, and the rights to tafasitamab from MorphoSys in February 2024. On the other hand, the company has also engaged in divestitures. Notably, it entered into settlement and license agreements with Sun regarding patent infringement litigation related to Leqselvi, Girexolitinib, and a separate settlement and license agreement for another matter. The company's financial summary reveals that they have engaged in share buybacks. This indicates a strategy of returning value to shareholders through the reduction of outstanding shares rather than distributing dividends. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights concerns regarding inventory buildup and supply chain disruption. The data shows a significant increase in the company's inventory balance, rising by $42.8 million from December 31, 2024 to September 30, 2025. Moreover, reliance on third-party manufacturers poses risks such as drug supply constraints, delays in clinical trials, increased costs, and regulatory issues. The global supply chain is also vulnerable to disruptions due to various factors like raw material shortages, labor disputes, public health pandemics, cyber attacks, natural disasters, wars, or geopolitical events. These concerns underscore the potential for inventory buildup and supply chain disruption, which could impact the company's ability to obtain sufficient materials for its drug products and product candidates. That concludes the financial summary for INCYTE CORP. Feel free to comment below, and I will be happy to answer them when possible.